So today we'll talk about the last interview I did with Adcore CEO Omri Brill. As you know, Adcore is a position of mine. It is actually quite a relevant position, and I've also been covering this stock here on my channel for a while now. In any case, today we'll first talk about the most important parts of that interview, in my opinion, about the highlights, and then we'll discuss a little about Adcore's valuation. And here, let me tell you already that I think this stock is really cheap, really undervalued. Oh, and by the way, Adcore is listed both in Canada and in the US under ADCO and ADCOF respectively, okay? In any case, as always, before we begin, nothing in this video is investment advice, okay? And with that said, let's get started. But you see, the most important part of that interview for me was regarding their technology division, regarding how their apps are progressing. As you know, Adcore is a digital marketing company, and its business is divided into two core segments. First, we have the legacy segment, which is their services division, which, well, is a normal digital marketing business. That's how the company started. But they also have a technology division, which is new, and which basically consists of the apps, of the software solutions Adcore has been developing over the past few years. Now, why is that important, right? Because this technology division has much higher margins than their services segment. I mean, while the legacy segment, while their services division has a 30% gross margin, something like that, Adcore's apps, on the other hand, have margins between 70 to 90%, as Omri, the CEO, mentioned in our last interview. So the more this new division grows, the more Adcore's overall gross margin will expand, making the whole business much more profitable than it is today. After all, their operating costs wouldn't change much because Adcore has a lot of operating leverage. So yeah, Adcore will get much more profitable if this new technology division grows. And well, with that, Adcore stock should also start trading at much higher multiples, right? So that's why the technology division progress is such an important subject, because, well, 80% of Adcore's investment thesis depends on the company scaling this new technology segment successfully, right? So that's why it matters so much. Now, what did Omri say that caught my attention? What were the most important things regarding the technology division? So first, it was important for me to know that the technology division still represents only less than 10% of revenue. Honestly, I was expecting things to be better than that, but well, it takes time for things to scale, right? I can understand that. But yeah, the technology segment is still small. Media Blast, which is their biggest app, right, has stabilized. It was growing a lot, but well, from what I understood, it has now stabilized. Media Blast, if I'm not mistaken, is delivering around 1 million Canadian in annual recurring revenue. However, the big promise is Proposally, which is Adcore's new app. They already have some paying clients for the app, which is still in beta mode, as Omri told us. However, from what it seems, Proposally should soon be mature, 100% complete. As Omri said, they're moving fast. They are in a sprint. So I believe we should soon see Proposaly's revenue starting to grow, which in turn should help to drive Adcore's overall growth and profitability over the long run. And from what I can tell, Proposaly could indeed be a big hit. And I say that because I watched Proposaly's presentation on YouTube, which, by the way, I recommend to everyone. And I've also watched their latest conference call, where they showed us how Proposaly works. And well, I have to say that I actually got very impressed. I think this software, I think this AI could indeed sell a lot. So that's it regarding Adcore's technology division. It still represents only less than 10% of revenue. They will not launch any new apps. They will stick with what they have, which I also think is positive. What else, right? Gross margins seem to be great. and could really boost the company's overall profitability, and we could finally start seeing this division grow more in the second half of 2026. And well, again, if this new technology division grows, margins will likely expand, and what I expect will happen is that Adcore stock will eventually start trading at much higher multiples, right? I mean, if all that happens, Adcore should eventually get noticed, right? And then, well, I will have been one of the first to arrive. It will be great. Now, regarding geographic growth, that was another very important topic. After all, as you know, while Adcore is growing rapidly in the Asia-Pacific region, revenue is declining sharply in North America. Now, honestly, I didn't understand exactly why revenue in North America is falling that much. However, what I did understand is that revenue in the Asia-Pacific region is growing much faster because Adcore has more boots on the ground there. And I also understood that the plan is to focus on North America to grow the technology division, which, well, will obviously cost money, right? Adcore will need to invest more in sales. But, well, let's see how that goes, right? But you see, I'm optimistic. I think that things will work out fine in the end. But anyway, I think those were the most important parts of my last interview with Adcore. I don't think I have anything more to add. And well, to close this video, let's now talk a little about Adcore's valuation. So, as I said, I believe Adcore stock is seriously undervalued, really. I mean, as we can see here, Adcore's enterprise value stands at only $3.5 million US today, right? While the company is posting $25 million in revenue and $9.4 million in gross profit. So in other words, Adcore is trading at an enterprise value to sales multiple of only about 0.1 times, and at an enterprise value to gross profit multiple of only 0.4 times. Well, honestly, these are very low multiples, if you ask me. I mean, for a profitable company that is growing consistently, with a 70% insider ownership, okay, which is not something you see every day, and that could eventually boost its margins, well, I think these are really cheap valuation levels for this company. I mean, think about it. For example, as Omri said, Media Blast is delivering about 1 million Canadian in annual recurring revenue, right? And the margins here are probably excellent, between 70 and 90%, as Omri told us. Now, considering Adcore's enterprise value stands at only $3.5 million US, if you excluded Adcore's entire business and just left Media Blast, you would be paying a multiple of about 5 times enterprise value to sales for it, for Media Blast alone. Now, it's true that a multiple of 5 times sales isn't exactly cheap, right? However, it is also far from expensive as well, right? So even in that situation, even if Adcore had only Media Blast, well, buying this company now at the current levels would still be 100% justifiable, right? I mean, it wouldn't be obviously absurd, you know? It wouldn't be a super expensive buy, right? Just considering Media Blast alone. So no, I don't think this stock is expensive at all, right? However, the reality is that we still have all the other apps, including Proposally and also Adcore's entire services division as well. It's not just Media Blast. So yeah, I think Adcore is trading at very cheap levels. That's what I thought 6 months ago, and that's what I still think today. That's why I'm invested here, right? But anyway, that's it for today. That's all I wanted to cover in this video, and see you next time.